For the past year, we've been talking about how strong the consumer is as unemployment remains low and the economy remains really strong. Our next guest traveled 140,000 miles visiting retailers across the country to get a gauge of where the consumer is and isn't opening up their wallets. For more, I'm joined by Scott Mushkin. He's the founder and CEO of R5 Capital. Welcome.
Thanks for having me.
It's good to speak with you. So the main thing that I guess everybody's curious about is when you look at your coverage universe, do you see signs in doing these channel checks and surveying what's going on out there that the consumer is cracking at all?
No. I mean, that's a quick answer. I mean, we just don't see it. I mean, if you look at the employment data that came out on Friday, it's strong, 3.5% unemployment rate. If you look at income growth, it's good, particularly people lower and middle income. So until we see any cracks in employment, I mean, the consumer really is about employment.
Right.
Until we see cracks in employment, it's hard to think the consumer is going to soften up too much.
But people will say things, and you cover Dollar General, Dollar Tree. They'll say, well, if the dollar stores are so strong, the economy can't be. You know, in other words, is that true, or what does it tell us about discretionary spending?
So I think what it says is Dollar General and Walmart, I put in this category. Usually people trade out of those companies, trade out of Dollar General, trade out of Walmart. Those companies are doing, those are two of our recommendations. Those companies are doing really well, and they're comping, or their same-store sales are stronger than they should be. And that's actually a reflection of their businesses and what the management teams are doing, rather than anything that has to do with the consumer.
Okay, so you're saying it's not necessarily a bad sign. I think about Costco, too, which is putting up 5% comps, quarter after quarter, which is a pretty good sign, nominally speaking. You also cover Amazon, so disruption has been a major theme, and there's people worried about who's going to survive even after this holiday season. Does it pose more of a threat for the Krogers of the world, which just did more layoffs last week and who you have a sell on?
Right.
How are they going to be able to survive?
We're really concerned about Kroger and traditional grocery. So you have Amazon, you have Walmart, you have Aldi. If you look at Kroger specifically, they compete with more Walmarts than anybody. They compete with more Aldis, and they compete with more Aldis and Walmarts than anybody. Very destructive. But then you look at Amazon, and we said, they're going to be relentless in consumables. If you look at the Amazon's, business model, a lot of it's generated through advertising. So we projected out to 2029. What will Amazon look like a decade from now? And most of their profits, or a lot of their profits, is going to come from advertising. That's big CPG companies that are going to pay Amazon. So you look at Kroger. I'm not sure there's a seat at the table for them. I know it's a big statement, but it's a fairly decentralized, grocery store that has some big disadvantages.
So you've got buys on Amazon, Walmart, Dollar General, sells on Kroger, Campbell, Kraft Heinz, and Smucker's. Real quickly, because you said in doing channel checks, you saw, for example, that Clorox was not getting good shelf placement. That told you maybe an earnings miss was coming. Any red flags you see as we head into next earnings season? I
think there's big red flags in packaged food. I mean, we look at, you said Walmart, 250 basis points of private label growth in the last quarter.
Wow.
If you look at placements, if you say Campbell's, if you look at Swanson's, which is one of their products, that product is now moving to the bottom of the shelf, and you want to be at eye level.
Absolutely.
So we're seeing definitely challenges there. Smucker's is another example where Folgers, which used to have almost 40% share, 50% share of the coffee market, now it's, again, bottom shelf, and that's we call it the craft beer trend. Which is a lot of people want to experiment with different brands, local brands.
Yep.
And coffee is one of those areas.
And private label, too. Scott, it's fascinating. Thanks for the heads up. We'll check back in with you in a little bit. Thank you for joining me.
Thank you very much.
Scott Mushkin is the founder and CEO of R5 Capital.